Labor's cost of living package will be funded in part by higher taxes. One of those, a change to the tax levied on profits made by oil and gas companies, the petroleum resource rent tax. The changes will deliver an additional $2.4 billion to the budget over the forward estimates. Joining me is Samantha McCulloch. She's the Chief Executive of APPEA, representing the oil and gas industry. Samantha, thanks for your time as always. How do you look at this change? Is it modest? Is the industry willing to cop it?
Well, Kieran, thanks for having me. The changes that were announced on the weekend, we think we recognise strike that balance between the current budget pressures, but also the undisputable need for a strong gas sector, recognising the very important role that gas is playing in the Australian economy, in our region, in terms of us being a leading exporter of LNG. And also in the transition to net zero. So the changes that were announced by the government aim to recognise that important role of gas going forward.
And do you think that it also shores up that investment and supply, which is all you and I have discussed before? It's a critical transition fuel.
Yeah, absolutely. I mean, these changes are coming at a time where we need more supply, more investment in gas. On the East Coast, at least, there are projections of shortfalls. No one wants to see that. We need to have the conditions for investment. In terms of the changes to the petroleum resource rent tax that were announced on the weekend, this will need to be considered in the broader context, including those cumulative impacts of other market interventions, approvals delays that we've seen and that have been a challenge for investment for the industry over recent months.
My understanding is there was extensive consultation, constructive consultation with the industry and government. Do you welcome that?
We absolutely welcome consultation always. The PRRT, in fact, has been reviewed 4 times since 2017, and the changes announced over the weekend, they will actually close out 2 long-standing reviews, the Callaghan Review and the Gas Transfer Pricing Review. This can provide now more certainty for the industry going forward to be able to consider future investments.
Because it could have been a lot worse. The Greens spokesperson Nick McKim says to describe this as the barest minimum would be significantly overstating what they achieved. These are terrible changes that will make next to no difference to an utterly cooked PRRT system. What's your reaction to that?
Look, when we look at the gas transfer pricing review, the other options that were on the table, Treasury identified as posing a risk to future investment in existing and new facilities. What we want to see is a framework that actually encourages new investment in supply. We know we need more gas domestically. Gas is playing an important role as that transition fuel. It's helping us move away from coal, helping us to deploy more renewables. But also the demand for gas in our region is growing, and we play such an important role, and gas underpins our strategic partnerships with countries such as Japan.
Do you, when you look at the other moving elements to the relationship with government at the moment, is it the code of conduct which you're most concerned about, which potentially does continue that cap on prices indefinitely?
Yes, so with the code of conduct, which applies to the East Coast gas market, the government has recognised in some cases the industry's concerns. It's moved away from a reasonable pricing model. It's moved away from a binding arbitration process. We appreciate the government's concessions there, but there is still considerable uncertainty in terms of what's proposed. So the underlying code now recognises that ongoing price controls will not be conducive to new investment in supply. So it sets out a range of exceptions and exemptions, but we are calling for more transparency around those processes.
How far off is an arrangement where the industry would be comfortable and that you feel that the supply would be shored up?
I think we're aligned in the sense that everyone wants to see conditions for new investment. We need new supply on the East Coast market. No one wants to get to a point where we're having blackouts and brownouts and gas constraints. So the test of the code will actually be whether it encourages that new investment in supply. We think with greater transparency and an exit ramp for some of those measures, there could be a pathway forward. But that consultation process is still open and it closes this week.
It does, yes. But this PRRT process, does it give you a bit of confidence? as to where it's heading?
Well, as always, we want to work constructively and pragmatically with the government on these reforms. We have raised concerns time and time again in terms of the impact of the changes that have been made on the investment environment. Of course, in the last 6 to 8 months, we've seen projects put on hold, investments that could be moving to supply the domestic market, they've been stalled. We've seen concerns from our international trading partners about Australia as an investment destination, but also as a reliable and secure supplier of LNG. So what we want to do is ensure that we're shoring up the investment environment now to deliver that gas to the Australian households, Australian manufacturers.
Samantha McCullough, the Chief Executive at APPEA, thanks so much.